resolving our viewer queries on that note, and let's chat about some of the fundamentals that the market is working with. Ritu Arora from Canara HSBC OBC Life Insurance Company joins us on the show right now. Ritu, hi, afternoon, and what a day for you to join us, a fresh high for the market. So what's the sense that you're getting with a whole host of global news flow lined up? Does it seem like the market could peter down from here, or do you think India is now sort of in a bubble of its own and decoupled, and we would continue to ride up with momentum?
Thank you for having me on the show. Clearly, India is an outperforming market. Globally, we are the best performing market this year so far. Even financial year-wise, we are best performing market globally. So that is something definitely to be happy and proud about. But as far as decoupling goes, I do not rest in that camp, and I believe we are very much aligned with the global markets. And that was a very recent example was that we reacted very sharply with when the Greece elections was announced, and our markets fell by 800 plus points. Having said that, the valuations are reasonable. They are not very high. We are way away from the peaks of 22 times forward market. We are still at 17 times forward. So there is a lot of headroom left, though we are at new highs. And I guess every movement from here will be a new high. So yes, we are in a good spot and might continue to be there. But what it also does is limits the possible upside stupendously. While we see FII flows in the market, we need to also reckon with the fact that our corporate earnings have been muted. If we are looking at a 12% kind of a corporate earnings, that will cap the upside potential of the market, because market cannot be run away unless we see earnings and growth coming back to the market. So I see a positive momentum and bias in the market, but I do not see a runaway positive market. I don't see a 30% upside from here directionally as a secular move. What I definitely see is a sectoral rotation, some sectors outperforming the market by a wide margin, and interest rate sensitives could be that sector. So sharp movements in sectors and stocks, and a market which remains buoyant and positive.
Ritu, let's talk about the global risk, and currently there are two big challenges. One is China and second is Europe. Can we overlook both these global concerns? There are two global wrinkles.
You rightly point out, US is a strong point and is doing well, which gives a lot of comfort to economies like India. But Europe is likely to be a center of uncertainties over the next year. Greece election is just one of the first pointers, but the friction in this sector and this part of the world is only increasing. Euro has been depreciating sharply, and I focus on currency also because that will impact how RBI can continue with its rate cut cycle. China growth not being there will be a concern. It could actually turn out to be a sweet spot for India as an alternative, and it's also a sweet spot because we're seeing commodities coming off. One of the key reasons is China growth being muted. If we can restart our capex cycle in this sweet spot and consume the commodities that we need, we will be ready when the world growth comes back. It's at tepid 2.5% now, and we will be ready in a couple of years as growth comes back. Actually, I would also worry about Japan. Japan is an economy to be reckoned with, and they are in a phase of rapid quantitative easing, and currency is depreciating. So in this environment where euro is weak, yen and yuan both are weak, Indian currency will also be impacted, and I would look out for that, not just the equity flows and the equity impact.
Why is there so much of heightened frenzy in the entire consumer space? HUL in this month itself has added about $6 billion. That is equivalent to the market capitalization of Tata Steel. Isn't that insane?
It is a little high reaction, but that seems to be the only sector where consumption is coming back. If we also detach ourselves for India for a moment and looked at US, the fact that crude is easing off, retail and consumption is likely to come back as the first sectors which will show people returning to the market. And that is the expectation globally. I believe that as things are getting better in the economy and in India, inflation is coming off, crude will give a positive impetus, and commodities and food prices are sobering, and hence consumption coming back is the momentum which one would like to capture in these stocks. Some reactions can be exaggerated, but I do myself like consumption sector. Some of them have run up a lot to build new positions in, but it is a good sector to have positions in the current state of Indian economy.
So what else are you sectorally betting on, Ritu, right now, which could take leadership in the market and perhaps be a little isolated from the market volatility that we may see because of the global news flow?
I don't think you can isolate yourself from market volatility. We will see sectoral sharp movements, and you would see some sectors performing for a couple of weeks and then taking a breather. So volatility, I believe, within sectors is going to be the order of the day. But within that, I do like interest rate sensitives. I very much like private sector banks. I have built positions in infrastructure, cap goods incrementally over the last couple of quarters. There's still entry opportunities there. I like automobiles. I still like to maintain weight in IT sector and consumption to balance the portfolio. So that is how I'm structuring my portfolio.
Okay, Ritu, good chatting with you. Thanks much for taking time out and speaking with us today. Well, that's the view then coming in from Ritu Arora. Let's take a look at what the market is up to right now. And we're still latching on to 8600, 8627 still intact on the Nifty. But monetary easing poses the biggest risk to global markets, says Nassim Nicholas Taleb, the renowned author and risk analyst, believes that quantitative easing in the US has created hidden fundamental risks. Taleb also believes that India is robust economy and far less fragile than even France. ET the press remade caught up with Taleb and began by asking him about the key risks to the financial system.
The first problem, significant one, is that the easing that has taken place in the United States and in Europe on the part of central banks, and now you guys got a contagion, had the effect of helping a certain class that's not even in the 1%, and not even in the 1% of 1%, certain class of people who got richer. Also, more structurally, that the recurring a problem that's a result of bad monetary policy by Mr. Greenspan. You lower rates, you lower rates, you lower rates. Every time something happens, you lower rates.
Right.
You cause distortion in the economy, hidden risk taking, and then we have a crisis coming from that. Of course, we have to cure it with some monetary policy, but the risk is, of course, that we did nothing on the side.
That's
so
right.
You don't cure a problem with the same problem. So that's the first lesson. That's one. I think that large corporations today, in 2015, are relatively more powerful than they were in 2010 via lobbying efforts. And a large corporation, their aim is to work for themselves and their shareholders. That's the second problem. The third one is what I call skin in the game problem. Is people taking risks. In America, you have a larger class of people who are taking risks for others, all right? They make the benefits, others keep the harm.
Right.
And that's what causes distortions in the economy.
If I may just turn and ask you two questions on oil. We mentioned that nobody could have predicted that oil will crash about 60 to 50% that it has. The question is, there was a time of peak oil, there is now a time of cheap oil. Do we risk, is the world at a larger risk because of this cheap oil than it was because of the peak oil?
I don't like cheap oil, but I like that the Saudis have less revenues. I think a good thing that the Iranian will become part of the West, I think, progressively become part of the West, because that will force them, to take much more pro-West. We already see the hint attitudes. So it would have some good things, but cheap oil is a bad thing for us because it will slow down a lot of the efforts we had in finding alternative sources of energy. And we very badly need that, alternative sources of energy.
What are the improbables? What are the, the unpredictables for an economy like India? Is this political, religious disparity or economic disparity?
I mean, there is the economic disparity in India, but I mean, India is a robust country. It is, say, on the fragility index, I put it less fragile than France. Right? Less fragile than many European countries. So India is we have a robust system, a system of people disagreeing without any. I mean, of course, you have we had violence in the past, but it's nothing, serious for such a large place. It's a very robust country. It has a huge pool of talent, and at some point you had too large an administration, and that needs to be shaken. So now I think after listening to the mood, seeing the mood with Prime Minister Modi and his approach to things, and he said something that was, to me, is critical. He said that he'd rather build 1,000 schools than one university.
Yeah, that's right.